Hey everyone, welcome back to Corporate Decoder, the place where we try to peek behind the corporate curtain and see if companies are really walking the talk. Today we are looking at Lexaria Bioscience Corp, a company that has been in the news for, well, let's just say it is not all good news. Before we dive in, if you like getting these insights straight from the source, make sure you hit that subscribe button. We also have a growing community on Discord where we break down these filings even further. The link is in the description below. Alright, so what we have here is a Form 8K, which is like a current report for public companies. It is for announcing major events that shareholders should know about. And this one from Lexaria Bioscience Corp. Dropped on the 4th of February of 2026. The big news here, folks, and it is a pretty significant one, is that Lexaria received a notice from Nasdaq. This notice is a bid price deficiency notice. Now, that sounds pretty serious, and it is basically, Nasdaq has a rule that companies listed on their exchange need to maintain a minimum bid price. For the Nasdaq capital market, where Lexaria is listed, that minimum is $1 per S-share. And according to this notice, Lexaria's stock has not been meeting that requirement. Their stock price has fallen below that crucial $1 mark, which means they are currently not in compliance with Nasdaq's continued listing rules. This is a big deal because if a company can't stay listed on a major exchange, like Nasdaq, it can make it much harder for them to raise money and for investors to trade their shares. Now, Nasdaq doesn't just pull the plug immediately. They give companies a chance to fix the problem. Lexaria has 180 calendar days from the date of this notice, which means they have until the 3rd of August of 2026 to get their stock price back up. To do that, the closing bid price of their common stock needs to be at or above $1 for at least 10 consecutive business days. They have a little wiggle room, up to 20 business days, if Nasdaq decides to be a bit more lenient. What happens if they don't make it? Well, they might be able to get another 180 days, but that comes with strings attached. They'd need to meet all other listing requirements, and most importantly, they would need to tell Nasdaq they plan to fix the deficiency by doing something like a reverse stock split. A reverse stock split is essentially when a company reduces the number of its outstanding shares, which in turn increases the price per S-share. It's a common tactic when a company is trying to avoid delisting due to low share price. Lexaria says they are going to be watching their stock price very closely and will consider their options to get back into compliance. They are trying their best to stay on Nasdaq, but they also admit there is no guarantee they will succeed. Now let's look at what is actually traded on Nasdaq. Their common stock with a par value of $0.001 per S-share trades under the ticker symbol LEXX on the Nasdaq capital market. This is what is currently at risk if they can't get that bid price back up. And the report is signed off by Richard Christopher, the CEO and Principal Executive Officer, on the 6th of February 2026. This is basically the official notice from the company's leadership acknowledging the situation. So let's break down what this all means. Lexaria Bioscience Corp is facing a serious challenge. Their stock prices dip below a critical threshold set by Nasdaq. This isn't just a minor hiccup, it puts their listing on a major stock exchange in jeopardy. The company has a deadline to turn things around, and their options are limited, with a reverse stock split being a key possibility if they need more time. Looking at this situation, the biggest risk for Lexaria right now is the threat of delisting. If they can't regain compliance, it could significantly impact their ability to access capital and could certainly make investors nervous. On the flip side, if they can execute a plan, perhaps through a successful reverse stock split and a subsequent increase in investor confidence, they could potentially normalize their situation. However, the core issue remains that the market has clearly valued the company's shares below that $1 mark, and that is a signal that investors are not currently seeing the value that would sustain a higher share price. The company needs to convince the market that its future prospects justify a higher valuation. Until then, this Nasdaq deficiency remains a significant overhang. Alright, that is our breakdown of Lexaria Bioscience Corp's latest filing. What is your take on these developments and what they signal for the company's future? Drop your thoughts in the comments below. If you found this analysis valuable, hitting that like button really helps us out. And don't forget to subscribe for more deep dives into corporate filings, and as always, check out our Discord community in the description for more in-depth discussions. Thanks for watching, and we'll see you next time.